New Era Energy and Digital Inc. is currently trading at $2.83, an absolutely staggering gain of 83.77% in today's session. It's the kind of move that lights up watch lists and sends trading forums into a frenzy. But the real story here, the detail that gets lost in the excitement of that percentage gain, is the deafening silence from the company itself. There has been no press release, no SEC filing, and no verifiable news to underpin a near doubling of the company's valuation in just a few hours. This is where the line between calculated speculation and pure gambling becomes dangerously thin. The market expectation is clear and powerful. It's a narrative of discovery. Investors piling in through platforms like the Robinhood app or SoFi Invest are betting that they are on the ground floor of something huge. The chatter suggests New Era has had a silent breakthrough, perhaps a new patent on grid balancing software or a private partnership with a major utility. This is the story traders want to believe, the one that paints this small-cap stock as the next NVIDIA stock, a company that just started its vertical climb. This is the expectation. The reality, however, paints a much more precarious picture. A closer inspection of the trading data tells a different story. The volume, while high compared to its daily average, is not showing the kind of broad institutional buying that accompanies a genuine fundamental shift. We aren't seeing massive block trades being executed by big funds that use a service like Fidelity Wealth Management. Instead, the order flow is choppy and erratic, characteristic of a retail-driven speculative mania. Sophisticated traders on a platform like Interactive Brokers who can analyze Level 2 data would likely see a thin bid-ask spread and significant volatility, signs that the price isn't well supported. This doesn't look like the careful, methodical accumulation we saw in the early days of Tesla stock. It looks like a feedback loop of social media hype and fear of missing out. This is not a vote of confidence from Wall Street. It's a lottery ticket being scratched by thousands of individual traders. For those practicing self-investing, this is a critical distinction. An automated system like Schwab Intelligent Portfolios would almost certainly avoid a stock exhibiting this kind of unanchored behavior, as its algorithms are designed to filter out precisely this type of extreme, newsless volatility. Let's dissect this recent movement further. An 83% gain on a stock priced under $5 often points to one of a few scenarios. It could be a classic pump and dump, where a group of individuals artificially inflates the price to offload their shares onto unsuspecting buyers. It could also be a short squeeze, where a sudden price increase forces bearish investors to buy back their shares, pushing the price even higher. But without access to the short interest data in real time, that remains conjecture. What is certain is that the risk-to-reward ratio has become incredibly skewed. Anyone considering an investment at this level is not buying into a business. They're buying into a momentum trade that could reverse course with shocking speed. A proper online investment strategy, whether through Fidelity or another top-tier individual brokerage, demands more than just a green arrow. It requires a thesis. And right now, the only thesis for New Era Energy is that it's going up because it's going up. That's a dangerous foundation for any portfolio, whether it's held in Fidelity mutual funds or a self-directed SoFi investing account. So what does New Era Energy and Digital actually claim to do? Stripping away the market noise, the company's stated mission is to operate at the intersection of renewable energy management and digital technology. They're supposedly developing software platforms that use artificial intelligence to optimize grid power grids, manage decentralized energy resources like solar and wind farms, and improve energy efficiency for large-scale consumers. It's a compelling sector without a doubt. The world needs these solutions. However, the space is also incredibly competitive and capital-intensive, with major players and well-funded startups all vying for dominance. Unlike Apple stock, which can be valued based on billions in iPhone sales and services revenue, New Era is a pre-revenue or early revenue company. Its value is based almost entirely on future promise. Past financial reports have shown a consistent cash burn, which is normal for a company in its development phase, but it also means it's dependent on raising capital to survive. This recent price surge, if it holds, could paradoxically help them, allowing them to issue new shares at a higher price to fund operations. But that brings its own set of risks, namely shareholder dilution. Looking ahead, the future of New Era Energy's price hinges on one thing: validation. The speculative frenzy cannot last forever. For this new valuation to be even remotely sustainable, the company must produce a catalyst that justifies it. We would need to see a material announcement, a major client acquisition, a technological milestone verified by a third party, or a strategic investment from a credible industry name. Without that, the air will come out of this balloon and the descent will be as rapid as the ascent. The risk here is monumental. A correction of 50% or more is not just possible, it's probable if the company remains silent. This is the kind of stock that can permanently damage a portfolio, especially for those new to online investing who may have gone all in using Robinhood fractional shares to get a piece of the action. This is a moment that calls for discipline over excitement. The professional approach, whether using the Fidelity trading platform or the tools available on Interactive Brokers, is to watch from the sidelines until the facts emerge. I want to hear from you all. Comment below with your take. Is this massive surge in New Era Energy and digital a sign of a hidden gem about to be revealed, or is it a classic example of a speculative bubble? In the final analysis, we are faced with a massive chasm between expectation and reality. The expectation, fueled by an 83% price spike, is that New Era Energy and digital is the next big thing in a critical industry. It's a story of innovation and imminent success. But the observable reality is one of extreme speculation, a rally completely detached from verifiable news or fundamental improvement. The trading patterns suggest a retail-driven mania, not a vote of confidence from informed capital. While the dream of catching a stock before it takes off is what attracts many to the market, this situation serves as a stark reminder that extraordinary gains are often accompanied by extraordinary risks. The disciplined investor, whether using SoFi ETFs or building a portfolio of individual stocks, must learn to distinguish between a company's potential and a stock's unsupported hype. The story of New Era today is not about its technology. It's about market psychology. And until the company provides a concrete reason for this incredible move, the prudent course of action is to assume the risk is simply too high. Disclaimer: this content is for educational and informational purposes only. It is not financial or investment advice. Please do your own research or consult a licensed financial advisor before making any investment decisions. Don't forget to like, comment, and share. Subscribe for more finance updates and market insights.